Hello, this is Kevin Rice, and I work for Premier Mortgage Resources. I'm a 29-year veteran of the mortgage industry, and I'm currently licensed in 4 states: California, Idaho, Oregon, and Nevada. Today, we're going to talk about the home equity conversion mortgage refinance. This is an interesting product designed specifically for seniors age 62 and older. It is a regular FHA loan and sponsored by the Department of Housing and Urban Development. It's made specifically for seniors to help them in their retirement years. The idea behind this product is that it can eliminate the principal and interest portion of their monthly mortgage payment. For most seniors, 75% of their net worth is in the equity of their home. However, that equity is not liquid. So this product can help access some of that equity, turn it into liquid cash to help them in their retirement years. It is an FHA loan and considered very safe in many situations. One of the requirements of this product is they have to go through a counseling session. This counseling session is done by a third-party vendor, and the lender cannot participate in any way, shape, or form. The borrower chooses that counseling agency from a list that they are provided, and they can have their heirs or family members or close friends on the call with them if they would like to do that. The counseling session typically lasts an hour to an hour and a half, and they can do it over the phone, they can do it in person, or as a video conference call in some situations. There are many misunderstandings about this loan. First of all, the borrower always remains on title. The bank never takes title to the home. The borrower still owns the home. The bank never owns the home. And the borrower can pay off this loan or sell this home, the loan at any point in time. There is no prepayment penalty on this loan at all. The other thing about this is that it's very unlikely that the borrower can outlive this loan, as it states in the promissory note that they sign that the loan is due and payable on their 150th birthday. So they can be assured that they can live there comfortably for the rest of their life. One of the main benefits of this loan is that there are no payments. When I say that there are no monthly mortgage payments, keep in mind that the borrower still is responsible to pay the property taxes, homeowners insurance, and if there are any HOA dues, they will be responsible to pay that as well. On a regular loan, when you make your payment, the balance decreases slightly. On this loan, because you don't make a payment, the balance will increase. However, the equity of your home increases as well. So, upon the death of the borrowers, the heirs can either sell the home and keep the remaining equity, or they can pay off the loan with any other assets they may have, or they can simply refinance it and keep it for themselves as their own primary residence, second home, or investment property. I cannot reiterate this enough. One of the main advantages of this loan is that there are no mortgage payments. Again, borrower still is responsible to pay the taxes, insurance, and any HOA dues. But to eliminate the principal and interest portion of their payment, sometimes $500, $600, $700 a month or more, this can create a significant raise for the borrower and give them an additional peace of mind knowing that they're not strapped with that mortgage payment. Another advantage of this loan is that if the home is free and clear, or if they have a very small loan balance, they could potentially open up a line of credit with the equity in the home, or create a monthly income stream for life in some situations. This provides a huge comfort level for the borrower, knowing that their limited Social Security income may not be the only source of income they have for their retirement years. Think about those borrowers who have lived in their house for 20, 30, 40 years, and all of the equity that they have built up. That equity is dormant equity if they're not using it properly. So by creating that line of credit or that monthly income stream that can help them in their retirement years, if they're on limited Social Security income, it just provides a huge sense of relief for those senior borrowers. Again, remember, 75% of the borrower's typical senior's net worth is in the equity of their home. And that equity, unless it's used, is not a liquid asset for the borrower to use in their retirement years. By accessing the equity in their home either with a line of credit or a monthly income stream or both, that income is typically tax-free income. So instead of taking money out of any retirement account that they may have, which typically is a taxable income, if it's an IRA or a 401k, of course some Roths are not taxable, but the equity in their home is a non-taxable, considered non-taxable income for that borrower. That is a huge financial advantage to be able to take out that equity as liquid cash and not have to tap into any retirement accounts that they may have. The equity in your home is something to be used and leveraged in your retirement years. Again, 75% of most seniors' net worth is in the equity of their home. However, during their retirement years, they put that on the sidelines and don't consider using that in their retirement planning. By opening up that line of credit or that additional monthly income stream, it can help the borrowers on their limited Social Security income have a better quality of life during their retirement years. If you were able to eliminate your principal and interest payment on your mortgage, how would that feel? Would you be able to free up enough time to take more trips, to visit family members, to go on the vacation that you always wanted to go on, to even invest more in other things that are of interest to you? So think about what that can do for seniors who are on limited Social Security income, freeing up their monthly principal and interest payment, what that could do for each and every senior out there in their retirement years. One of the biggest fears for most seniors is that they will outlive their money in their retirement years. But by looking into a home equity conversion mortgage and by tapping into some of that equity, that can alleviate some of those fears by setting up a simple line of credit or, again, a monthly income stream or a combination of both. One of the things that we always tell our borrowers is not to treat this loan as a loan of last resort. We see many borrowers come to us when they're out of cash, they've drained their retirement accounts, they're on limited Social Security income, and they're not sure how they're going to make ends meet. So by setting up this loan now, before you actually need it, and if there's enough equity to set up a line of credit, you can set that line of credit up, which does have a growth factor, to be able to use down the road when you actually need the money. Okay, so just to recap on this loan. The loan is designed for seniors age 62 and over. If you're not 62, I'm sorry, you cannot participate. This is the only loan out there that is age discriminatory. If there's enough equity in the home, you can set up a line of credit to be used later or now if you wish. You can also set up a monthly income stream or a combination of the line of credit and the monthly income stream. This loan is for primary residences only. So the borrower has to live in their house for 6 months and 1 day out of the year. It's okay to own a second home or investment property if they have other properties. And it's okay to travel. So if you want to travel for 2 or 3 months out of the year, go rent an Airbnb in sunny Florida during the wintertime, that's great too. But again, you just have to live in the house for 6 months and 1 day to be considered as your primary residence. I hope you found this information beneficial, and I would encourage you to explore the home equity conversion mortgage refinance. Feel free to give me a call at 208-914-8927. Thank you for your time and have a great day.